In this video, I want to speak about gold because at the moment we do have quite interesting price action and structure. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market flow, and by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we just had a very strong impulse to the upside, followed by the start of this correction. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how we have the 0.32 and 50% Fibonacci retracements currently lining up exactly at this area, which, if we look left, we can see how it was also a very strong area of demand and support from which all this rejection to the upside started. And as we're testing this exact same area, there's a good probability to see a potential rejection to the upside away from this area. Dropping down the weekly, we can notice how from a weekly perspective so far, the market has been behaving exactly as we usually expect in an ideal uptrend, creating higher highs and higher lows and going and testing every time the previous resistance turns support. And we can see how at the moment that is exactly the level that the market is currently testing, the previous resistance turns support. Now, as we're testing this zone, there's a good probability from here to see a potential rejection to the upside, considering that this box here is exactly the level from which the market had created this previous move to the downside, which is now turned support. Dropping down on the daily time frame, what do we see? Now, from a daily perspective, this is where we have problems, because here on the daily, we can see how the market has clearly been creating lower lows and lower highs and is currently still in a bearish trend. We must notice how this zone here is previous daily support that preceded this move to the upside, which has now been broken to the downside, so is now turned resistance. So what we know is that until the market will remain below this resistance, it can easily continue lower. However, if the market breaks back above this level, this previous support, now turn resistance, would at that point once again become support. And after the break, on the retest of this previous resistance turn support, this is where we would have quite good probabilities for a potential rejection to the upside, because at that point, monthly, weekly, and daily would all be aligning for a potential move higher in all perspective. So if we do get the break on the retest, how we could be approaching a potential rejection higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you enjoyed this free analysis, education, and update, make sure that you drop a like and a comment. It really does support the creation of more free analysis, education, and updates for all of you. And I will see you in my next breakdown.